Hello, everyone. How are you doing tonight? Sorry for my tardiness. Hopefully, we are live. So I'm going to check as Diamond begin to open up the live.
Welcome in, everyone. Thank you so much. Everyone that's a part of the credit fam, everybody that is a part of the money making community. Thank you guys so much for joining in tonight. As you guys know, we have been doing the credit kickoff for the entire month of January, and tonight is the last night of the credit kickoff. Our topic for tonight is going to be the new FICO changes that could drop your score by 60 points. So as you guys are coming in, please let us know where you are watching us from. So I want to give a shout out to Texas. I am here in Texas. Thank you so much, Ron, for joining in. And just as you come in, let us know where you are viewing from. And also, we want to let you guys know that though this might be the last weekend of the credit kickoff, we will be going into our No More Getting It Out the Mud challenge. And it's all about collaboration. So we want you to tell a friend to tell a friend, bring your partner, tag your children in, tag your family in, and we're going to be dropping some real gems on what you can do to not only leverage your credit, but to also make money, produce financial freedom for you and your family. And also, if you guys don't know who I am, my name is Diamond Chanel. I am Sherry's daughter, but I also teach you how to leverage the online space to make money. Now, for a lot of you, that might be making money so that you could pay off your credit card debts, or maybe making money so that you can replace your 9 to 5, whatever it is. I tell you exactly how you could do that from the comfort of your own home. So what I'm going to do is drop my channel. And you guys can follow me there if you guys are interested in learning different ways to make money online. Now I'm going to shift the conversation back to Sherry as we get into our topics. Also, as you guys are viewing, coming in, if you have any questions, leave them in the comment section and we will circle back to it in towards the end.
And Diamond, if you can, for the people, drop the video you made on how you can make $1,000, or that video that you rolled off online with social media. If you can share that with the people.
Yes,
um
how to make your first $1,000 online. I'm going to share that with you now.
and also see if you can do the collaboration as we start. I don't know if you
Mhm.
can do it in the back office. And I want to talk about today, you guys, on what you need to look out for on the new rollout. If you don't know, FICO 10 has been talked about a lot. You guys might have heard FICO 10, but the FICO 10 series, they have added more models that you need to know about that just rolled out. And for everyone that's actually dropping in your location, thank you for doing that. And if you're seeing this stream later on, make sure you drop your location also. Now, with this FICO 10 rollout, Diamond, I'm going to have you, if you can come back up, let's share with them the article so we can go into details. And we're going to go over, it's right on the Experian website. So you guys can really understand what's going on. And if you can scroll up, Diamond, you're seeing that this article is just dropped, and this was at the beginning of this month. And as it says, the FICO score 10 suite now has 6 types of scores, although there are some significant differences between them. Focusing on the fundamentals can improve all your credit scores. So let's dive into what is FICO 10. So if you guys didn't know, this is a lot of confusion with a lot of people, and it is true that you should have this confusion if you don't know what credit score. A lot of people say, I see different credit scores for myself. What is my real credit score? It depends on where you're viewing it. So when it comes down to FICO, I want you to think about it as your Apple iPhone or whatever phone you have, or let's compare it to Windows. A lot of us know about Windows with Microsoft. You have different versions that rolls out of Windows. You got Windows 11, Windows 10. And so with your iPhone, you might ISO 10, ISO 12. These are new models that function a different way. So with FICO, it is a score model company. So the Fair Isaac Corporation. So they create scoring models. You might have also heard of Vantage scores. They're just like FICO. They create scoring models. So let's say FICO would be the Apple, and you have Vantage would be an Android. So they're both in competition, but what they do, Apple, the iPhone is their phone series, and you have Android, they have their phones. So with these scoring models, you have different versions that they roll out. So just like with Windows, you have different years, they'll create a different Windows version. Now, you may have bought a laptop with Windows, and your laptop may be 5 years old. So somebody that buys a laptop today don't have the updated version. I mean, they'll have the updated version of Windows than somebody with that older laptop will have. They'll have the updated type of model of running an operation system. The same thing with the banks. So banks are paying for this service for risk. So different banking institutions, they're purchasing this software just like Microsoft. So these make up these scoring models because the banks use this to judge risk. If we get loans, this operating system will bring in that person credit score and credit report according to the model that we're using and give us a score. How risky is this person? Now, some banks are using a older model, just like the example with that person with the laptop. They're not getting the new model. Now, you can choose to purchase the software of Microsoft and update that older laptop that's 5 years old. But you might say, hey, Microsoft Office, my versions of Windows or Word or Microsoft Excel, even though it's 5 years old, it's fine with me. I don't need the updated version. That's how the banks roll. So you might have a bank like Chase, you're going for a credit card. They're going to judge your credit score from a FICO 8. It might be a credit card, FICO 8. That is the most common model is FICO 8. So this is an older scoring model. Not all banks update their models, just like that laptop. But there are now banks that's going to adopt this new FICO scoring model. So just like you may choose, if your laptop is older, to download the new model of Microsoft Windows, the updated software, or I don't want to spend the money, I'm fine with this prior version. Now, with FICO, they are updating their software. And here is the suite that they're offering. Just like Microsoft, they offer Microsoft Office. What do they offer in that? Word, Excel, PowerPoint. This is the same. Here's their offering of what banks can use. So now under this FICO 10 software, you got FICO 10, FICO 10T. This T is going to be for trending data. So we're going to go and we're going to go into this. They have a FICO auto score 10. Now y'all might see this even if you have experience, and it'll show you your scoring model. You might see a mortgage model 8, and that, so they do have our auto model. If y'all that is paying for Experian, they'll say, FICO auto score model 8. So this is their updated version for the auto score bank card. And you'll see this with the 8 too. This FICO's bank card score 10. And this is something new that you will not see in those prior models of FICO. This is a new update. FICO score 10 BNPL. Now, this stands for buy now, pay later. So now this is all rolling out. We're seeing like Affirms and what's another, Afterpay, because this is new in the system. Remember, FICO 8, this is the FICO 8 might be like 2015. It is some years back because you had the FICO 9 in between there. But 8 was the most actual bought by the banks. So they're not willing to update. They didn't want to pay more, just like you might not want to pay more for the new Windows update. I'm just going to stick with what I got. A lot of banks are doing that. They're sticking to what they got. But now some of them might choose to get this updated, improved model. Allegedly, if it is supposed to be better, just like Microsoft, they'll say we made changes, it's an improved model. Or with your iPhone, hey, you want the iPhone 17, we got some more features. This is what they're doing to the banks. Buy this, we have more features for you to judge risk. So a lot of banks will update this because this buy now, pay later is not in the older models, because back then when they purchased it, buy now, pay laters didn't exist. So now they want to factor in buy now and pay laters in risk scoring on how to judge you. Okay. So if you are dealing with a bank with judging with a FICO 8 bank card, if you're going for a credit card, then it's not going to factor in buy now, pay laters to count against you, or putting it in and where it goes with your debt. But if they're using this updated model, it's going to count against you. Also, FICO 10T. When y'all see this 10T, this is something they just started with the 10, okay, which wasn't done before. And y'all want to pay real close attention to this stupid 10, right? T here, this T, it stands for trending data. So for all my folks, if you're going with a bank that's using a FICO score 8 with your credit card utilization, if you pay that down within a 30-day cycle and your cards update as being paid off, your score shoots up, skyrockets. Now, with this trending data, if you pay your cards down, they're going to look at the past 24 months. Was you carrying balances? Because they're going to count that against you. Peep that. They're going to count that against you in this new model. Why would you do that when actually my stuff is paid down? What would be the problem? But this is a new way that they're doing that. And with these new FICO 10T models, as you can see down in this article, Diamond, if you scroll down, they're going to indicate one of the biggest differences: late payments can hurt your scores more. So in this model, late payments is if you're late compared to the FICO 8 or the FICO 9, it's going to penalize you more. And you're going to see with a late under this model, a bigger dip in your credit score. So if somebody have a 700 credit score and get a late, you guys might see already a 60-point decrease in your credit score. Under this model, if they're judging you and you had a late, they're going to deduct even more points. You may see like an 80-point drop. So they're telling you straight up, it's going to be even more harsh for late payments. So if you got multiple late payments, they're judging it harsher under this. Also, personal loans um, might lower your FICO score 10. So if you take out a personal loan, it's going to be a bigger impact on your credit score because, as it says in this article, many people would take out these consolidations of debt kind of loans like, okay, I got really high utilization. And so, what I'm going to do is consolidate this with a personal loan. Maybe my interest on that personal loan, let's say, is 12%, but my credit cards on average is 21%. I can actually save money. So I'm going to take out this personal loan and then pay off my credit cards. And under that FICO 8 or that FICO 9, remember, it doesn't have the stupid T, that trending data. So if you pay that off, your score go right up and it's like nothing ever happened. But under FICO 10, you do that and you pay that off, it's still counting against you for those 24 months. And with that debt consolidation loan that you got, because now you got a loan, if you start to use that credit card that you just paid off, they're going to deduct more points, where the older models did not do that. Okay. And then here, credit card utilization is going to have an even bigger impact on your credit score. So if you think your credit card utilization, you lost points now is bad, they're saying if your utilization hit over 50%, you're going to see an even bigger impact on the decrease of your credit score. Okay. So this is what they're rolling out with. So Diamond, you can stop sharing this so people can know what's important, because this is the credit kickoff. The important part for you is strategy. Okay. So what happens is not every bank is going to transfer over to this. Like I said, some banks, just like me and you, they're not trying to pay for the update. They don't want to pay thousands for this updated model. Some banks say, hey, I'm going to stick to what I got. So you have banks or credit unions like Navy Federal. They have the FICO 9. They probably, since 9 is a little more updated, don't choose to go over to the 10T. Now, keep in mind with Navy Fed, one of their benefits with the FICO score 9, unlike 8, why it's better, because it don't take into account to count against you any medical collections or debts that don't medical collections do not calculate in that score. This is why everybody said, hey, with Navy Federal, I got lower credit scores and I get larger lines of credit. They work with you. The reason why, because they use that FICO 9 scoring model. So your the way it judges risk, you can get qualified for a higher credit score, even with more trouble credit, okay? Because it's not looking at medical debts. So a lot of people don't understand part of your strategy when you want funding, you need to know what the banks is using in order to qualify you. So if you want to use strategy, and I know I have more trouble credit and I want a larger credit card, maybe I need to get a relationship with Navy Federal. Or maybe if I have a better Equifax score and I have removed some negative items over there, I need to deal strictly with Truist because they're going to use a FICO score 8 and they're going to pull solely from Equifax. You need to know these banks. Certain banks and certain credit unions may even use a Vantage score. Like I believe, hold on, I have to my notes. Certain credit unions will only use a Vantage score 4.0 or 3.0. I'll have to bring that out of my notes later because I have all of this stuff recorded in my notes on banks that use strictly Vantage score 3.0 or 4.0 to qualify you. So if you know, hey, I look better on Vantage scores versus FICO scores, then I need to find banks that pull from my strongest bureau. You need to know about these scoring models, where you stand. So you need to know your credit scores. And you guys shouldn't be guessing anything. One thing that I think people don't know what they don't know, but people that kind of understand things about credit, you should never say, I applied for this credit card and I was surprised when they approved me. No, baby, you shouldn't have been applying over there if it wasn't in your mind a guarantee. I should have got it because you should be that direct and you should be, yes, you should be doing that much to know I'm going to pick my shots. So even when I played basketball in high school, I'm not taking a Stephen Curry shot because you know what? I'm not going to make that shot. Most players in the NBA is going to get to a particular spot and make and take the shot that they're most likely to make. They're not just heaving up three pointers, okay? No, Kevin Durant, he gonna stay in that little square around. He's not going all the way out. He can make a three-pointer, but that's not really his shot. You're gonna pick your spots. You should too. You should pick what you're aiming for with the shot that you're most likely to make. So you need to know if you're trying to get more approvals, you need to number one, figure out where is my scores stronger. Some of you guys have been seeing and say, hey, I noticed a lot of people say their Vantage scores that they're higher, but mine's is lower compared to my FICO score because with Vantage 3.0, 4.0, if you had a mortgage payment, a missed mortgage payment, it's going to actually penalize you harder than any other late payment. So when it comes to FICO 8 or a FICO 9, they see a missed mortgage payment like any missed payment. That's the way it reads it. But with Vantage, no, it actually penalizes you more over there for missed mortgage payments. So if you're a person that might have missed a mortgage payment one time, you're going to look better on FICO. So you need to know this about yourself. You need to know this. This is why I say when we talked about through this whole series, credit is personalized. You can't just, there is fundamentals to your credit score. Yes, just like also in high school, there's fundamentals to get a 4.0 GPA. You got to get A's in these categories. But at the same time, as human beings, some of us ain't really that strong in math. We're not, a lot of people say, I am not good at math. So maybe getting that A plus in math personally is not most likely to you because it's personally not a strong suit for you. You might be better at English. It's the same thing with your credit score. You got a different life history than your cousin, than even your spouse. So if you're a person that I already own a home, And I missed a mortgage payment versus someone who never owned a home, you can't judge your score according to what they're doing. There are generalities that work, but then there's a personal factor. And it's the same thing when you're building your credit. You must add that personal spin to you. As a person that filed for bankruptcy, a chapter 7 is going to be different than a person who filed a chapter 13. So somebody might say, and people don't know, how remove a bankruptcy? If y'all see me in the Q&A, I'm going to ask you, what type? Are you discharged yet? So these little things that you might think is, oh, it's just a broad umbrella. No, a personal strategy got to come into play. So this is part of even with the elite credit system, what understanding and knowing where should you be going for credit cards if you need to build credit. Even for a car loan, where should you be going if you really need a car loan? Where can you get your best chance with what bank according to your interest rates that you want to try to fit into? What's your best shot? Maybe if I'm going to go and I had a late mortgage payment, I shouldn't try to go with banks with a FICO that's going to be an approval, or a credit union that use, I'm sorry, Vantage scores, because I had a late mortgage payment. I might be better off by seeing if my credit score is over 700, a Chase Bank. I would probably do better because they use FICO scores. I'll probably do better over there versus a Vantage score. Somebody else that might have more trouble credit, I'll do better over at a bank that have Vantage scores. And you want to look at what bureau they're pulling from, because a lot of banks pull exclusively from TransUnion or exclusively from Experian and exclusively from Equifax. And so that's what you want to know. And to take it deeper, sometimes to know that, it goes down regionally. There are some banks that in the South, they may use Equifax a lot, but in the Northeast, they might use Experian. So you want to kind of know that and actually put a strategy in place. If they do, and you want to protect yourself, you just lock that score. Make sure you lock that score. Like, I'm trying to force them to pull my strongest score, which is Equifax. But I have, or what I know that they could pull in my region where I live, either or. There are some banks like Citibank is like that. Citibank primarily is going to pull Equifax, but sometimes they do mosey they behind over to Experian. And another one, I'm going to say Bank of America, they're going to exclusively pretty much pull from TransUnion. You're going to use like a Navy Fed. They're going to pull from TransUnion, but they're going to do a Model 9, and you have Chase and them. They're going to use Experian more. They're going to do a Model 8. So you want to know that. You want to not just part of your strategy, if you're a person that got under that 700, always remember, I tell y'all that tip, long as nothing is just hitting you late every month, or it's not a new negative item within 90 days, if you add on a credit card, you can see an increase of 50 points on average. If you're under a 700 credit score, you can get all the way up to 700 without removing a negative item, as long as it's not hitting you. So part of your decisions on where I need to apply for, because I already got negatives on my credit report, I really need to be focused on a strategy. Where can I get those credit cards so I can see an increase in my credit score? I definitely need to know where that bank pulled from and what scoring model they're going to use. And you want to know for what type of credit, because some banks, they'll switch up. I believe we'll use Bank of America for their car loans. I believe they might even pull well, I think they pull TransUnion. They might switch up. I believe, I know Navy Federal sometimes, well, they used to switch up. Sometimes they'll tell you for the credit cards, they're going to pull for personal. Let me caveat that. Personal, they're going to use TransUnion, FICO score 9. Sometimes they'll tell you for a car loan, they can pull Equifax. Primarily, they're going to use TransUnion. But definitely, if you're with Navy Federal and you're going for a business credit card, they're going to pull Experian business, FICO score 9. So you might be thrown back if you're a person like, hey, I got my TransUnion real just cleared off, and you got a business and say, hey, I got a good relationship with Navy Federal. They're going to pull this TransUnion 9. I look solid there. For their business, they're going to pull a Experian FICO score 9. That's where they're going to go. And that is actually not business. I said Experian business. No, they pull Experian FICO score 9. So it's so many different inquiries depending on what you're trying to go for, because there is, if you're going for business credit and you decide to go that route, there are banks that exclusively pull Equifax business. They might pull Experian business or Dun and Bradstreet. Most likely, you're going to see Equifax business or Experian business for that. So you need to know that. Did you even build your credit reports on that side? Do you have that? Some of them will consider your personal credit scores. So they'll have different underwriting rules. So you want to know all of that if you're trying to build credit, depending on what your agenda is. If I'm trying to go and find a home, you need to stop. If you're dealing with a mortgage broker or a bank and you like, I want to go for a home loan, just don't sit up there and let them pull your credit. I'll tell them, oh, hey, listen, let me tell you what my score is here. But I need to know what bureau you guys are pulling from. And if not, you need to do some research, because why just sit up there and let people tear down your credit score for you to be denied, and you're digging yourself in the hole. All a part about your strategy of building your credit to get a higher credit score. You want to put that personal factor in. You need to know where your credit scores is. You need to know what's your strongest score, what's your weakest one. Sometimes you might have more negatives on your Experian than on that Equifax. So you need to know that. And you need to know wherever you're applying for, who they're pulling from, what scoring model you have. Because if it's this 10, FICO score 10T, and you went out to a firm, you got a buy now, pay later account, you might want to stray away from that bank. You may want to say, hey, I'm strictly going to go to a bank that have a FICO score 8, where that's not being accounted. That because that also, if it's picking up on that, if you're going for a loan, that's going to calculate in how much you can afford. So you might actually can qualify for a $50,000 loan. But if this particular bank is using that FICO 10T or that FICO suite over here, you might only qualify for a $15,000 loan. So it all depends on the banks and also the scoring models that they're using. So this is something that's rolling out this year. You want to watch out, because you could be totally surprised if you over here viewing your credit scores on the Experian website and you just be blown back like, I know I got a high credit score. How did these people deny me? They're saying I got bad credit. Where? Because they're using this different scoring model. So if you can, if they will share, always ask the banks before you apply, do you know what scoring model do you guys use? Sometimes they'll tell you, sometimes a lot of these people are blown away. They don't know what you know. And if I was you, if you don't, I'll step back and see if I can find out. I'll do some research. If you're part of the elite credit system, you just hit me up, you email us, I can look at it, and we give you a list according to your credit scores on what best credit cards to aim for. That's why I say I do have all these lists. So I keep this for people who are in the group. If they need to build credit, to direct them, hey, you need to stay here and you need to stray away from here. Because some of you guys, if you already got an account with Synchrony that you already know you ain't paid them, you ain't got no business just flipping and flopping around and applying for credit and go over there for that Walmart card. It's underwritten by Synchrony Bank. You already got a collection or with Synchrony or charge off. You got no business applying for that. So they're going to deny you. You already owe them folks money. So you need to know these things. You need to know, hey, Home Depot, I'm going to go over here to Home Depot and get a Home Depot card. They're underwritten by Citibank. Do you already have an outstanding debt? Well, you shouldn't probably go over there. Maybe you should be going to Lowe's. Lowe's is Synchrony. If you cool with them, I ain't got nothing with them, then you need to be over there. You don't really need to be going to Home Depot. So you want to know these little it's not little, it's a really major big factor. You also want to know underwriting rules of that bank. If you got a bankruptcy reporting on your credit report, baby, you got no business at American Express. It's a no. I'm going to just tell you, no. If you had a modification on there and it's showing up on your mortgage and you are applying for a brand new relationship with American Express and it's on your TransUnion, they're going to say no. It's going to be a no. They're just not accepting certain things. That's what Chase. If you certain places will take you after a longer period of time, maybe 2 years, like Discover a bankruptcy, maybe not fresh out the door. But some banks like Chase, they're not going to take that. Okay, so what your cousin can get might not be for you, and you might say my credit score is higher than them. Banks have underwriting rules. So you want to know about this because it's actually going to help you build and get a higher credit score and add into your strategy so you don't keep getting denied for credit and you start to see your credit score tank. Every time you get denied, or even if you get approved, any new hard inquiry is going to be 3 to 5 points as a deduction. So what you want to settle in, like I said, if you're under that 700 credit score, you don't have a new negative item hitting you every month, you could see an increase in your credit score of 50 points on average. People say, but I'm going to get a hard inquiry. Well, deduct from that 50 points, 3 points or 5 points. You're still up 45 points, worst case scenario. So you're still a win. You get what I'm saying? It's still a win. So this is just part, because a lot of people only talk about disputing, but you need to understand credit building and how to make your life better, how to build a stronger credit profile. So we'll land. Thank you, Miss Murphy. Thank you so much for the super sticker, and you always supporting the live. We really appreciate it. Thank you so much. Thank you.
So we're going to get to some comments and some questions that people posted here. Let's start off with this comment that said, if banks agree to these updates, they're kind of shooting themselves in the foot, aren't they?
Not to. So what with banks, they're not, because they're saying we're actually better judging risk against you. So just to give you some background, if y'all remember the 2006 and the 2008 foreclosure crisis, One of the things that was researched and found out, people that actually lost their homes had good credit scores. What they said the problem was, the scoring models didn't take in account the debts that they have. So their credit scores were high, but the debt, the overall debt burden to income wasn't factored in. So this is where they're getting this trending data from. Why they FICO so-called is putting that in, because this is supposed to take more consideration on debts that wasn't being picked up before. So if you're a person with you went on a vacation and you got afterpay, or what is that upgrade, I think it's afterpay, or and
Afterpay.
you might be thinking like, hey, I'm just paying it off. That, and just know, if the bank is using that FICO 10T, is counting against you, because they're saying they're taking in consideration that's less money you have available to pay us back, to put on these bills. So for them, they believe it's actually better for them. But how much it costs them to upgrade, they'll look at that. And a lot of times, depending on the bank, they might have tighter underwriting standards. So, for instance, with Chase, they may, for right now, stay at the FICO score 8 for maybe a little bit longer. They may, depending on how much is the rate of default that they have. So banks are going to consider that. With them, they're one of the tightest banks. So they have the 524 rule. With Chase, why they saying they don't care if you got an 850 credit score. If you got more than 5 new credit card accounts in 24 months, we not messing with you, because they have found out people that have a ton of new accounts default more than somebody that constantly do. So they don't care about your 850 credit score. So with them, they have less defaults because they're more stringent than most. So some banks, if they're really maybe a Capital One who do a lot more lending, and now they done took on Discover. Discover is, they don't take a lot of risk. Neither you can't have a negative item on there. Maybe an old bankruptcy, but anything like a collection, or it's a no for Discover. So, but Capital One, they do have a lot of subprime accounts. So maybe some bank like that, and now they're bigger, they might take that on, because maybe with subprime, people think about it. Usually, people who have high income earners is not getting a buy now, pay later account. Let's just keep it real. Buy now, pay later accounts like Affirm, Karna, is not targeted for people with high credit score or good credit. Okay. So banks that cater to subprime credit, like sometimes a Capital One, or another one might be Credit One Bank, they're more incentivized to upgrade to a buy now, pay later score through the new version of FICO, because the market that they cater to have lower credit scores. And who tends to get those types of accounts more? People with lower credit scores. So those things are going to come into play. So this is why we have this community. We give you updates. And so it's, unfortunately, technology, banking rules, things are changing. And you're just not going to get it and say, I got everything, that's all I need to know. No, it's not. You need to keep yourself educated on the changes. It matters. People think, and they hate to talk about it, politics play a big part. It does. It's a big part. I talk about, and this is a great one. If y'all haven't watched my video, the changes that Trump is making. And people might say, why Trump doing all of that? They don't want to help nobody. Here's the thing. Trump, why Trump canceling the credit bureaus? let me give you some real education. And if people can just get out of themselves for hate and I'm mad, sometimes you got to get out of your emotions and get into rationality. And people will be triggered because they're too emotional. You know what I'm saying? You got to calm down to hear the sense. And the sense is Trump was funded by people like Elon Musk, Peter Thiel. What are they? A lot of tech companies funded him. Who want to get at this market that's billions to offer banks like PayPal and what's another one? Plaid that y'all use. That's fintech. They want a piece of that money. They want some of that change. See, y'all thinking about emotions, they thinking about the dollar bill. And so what you got to get out of y'all emotions, nobody should be on either side. You should be independent. Because I'll say it and I'll say it again, baby, red or blue, neither is for you. They're paying, somebody is paying them. Trust and believe. They are not career politicians for nothing. Either way that you go on either side, they're funded by billionaires. The green energy, billionaires. Oil, billionaires. They're all working for special interest. It just boils down that one interest don't hurt you in your personal life as bad as the other special interest. That's just what it be. You get what I'm saying? Somebody that has a union job or a government job, like them cutting government jobs, that get at me. I hate you. But guess what? For a guy that might be a business owner, they might like, cool, it's reducing my taxes, because that don't get at him. You know what I'm saying? That's so everybody personalized, but both sides, they ain't working for you. Trust and believe. Neither side is working for you. If you can get in that, like, it just might swing to your way. Shorty swing my way. It might swing my way. But at the end of the day, they're really working for corporate interests. So the reason why Trump is doing that, even with the thing I covered, the bill that Tim Scott and them, people like, wow, they're letting you build credit. What is it? Credit Access Act and bill. And it's saying, oh, we want you guys, instead of going to the banks, to build up. And it's some other thing. I got another video that's going to really blow your mind. Trump is getting busy at the banks. I'm telling you, it's something. Y'all ain't going to get into my video on my expose, but the banks, it's been some major changes with this banking thing. And y'all going to be surprised when I drop the bomb. The major banks, oh, they coming at their necks. It's going to be good for you, the consumer. But what's going to happen is going to remove some regulations. Okay. All right. Y'all just got to understand business. A lot of time, more regulations. Yeah, it makes business more expensive, but it can open up more lending to you. So when you say these fintech companies, the Tumo credit card, the Pedo credit card, some of those credit AI, some of those credit cards y'all was getting, even with trouble credit with them large credit lines, those were fintech companies. Okay. They were fintech companies. And what kind of got spicy with a lot of them being shut down that y'all talking about, even with Apple coming in with Goldman and Sachs, that was more of a fintech little spin. But with more regulations coming in with fintechs having to go with the same standards of a bank with more regulations, now I really can't take the risk on the lower credit scores because the profits is not there. If I got to add all this compliance, it makes it more expensive. Okay. Whether it's good or bad or good, it depends on your perspective. But what I'm saying is places like PayPal, they're going for it to be a bank now. PayPal, a firm. it's going to be a bank. So you want to have these people already in a space of working with more troubled credit scores that's going to be able to offer you a lower interest rate and be competitors to the banks. The banks can't gatekeep no more. Think about it. The banks is the one that's really been getting at us all. If you right now, like Tim Scott and all of them saying, hey, we're passing a bill where now you can report utilities, and we're working a bill that you don't have to get in debt no more in order to build credit, which is true. That is good because the banks have been the gatekeepers. In order for you to build credit, if you can't get a loan or a credit card with a bank, you ain't got no credit. So they're controlling the block. So what they're saying, if you want to get on here, the gatekeepers that's stopping you is us, the bank, and the credit bureaus, or you ain't going to build nothing. And the credit bureau is just a reporter. The banks are the ones that decide to give you a loan or not. A lot of y'all don't understand. The banks love it when you have bad credit. Them in the credit bureaus, FICO, oh, they friends, baby. You think your bad credit is bad. It is to you because you're paying more interest. The banks love it. They love it. The credit bureaus love it. Little do you know, the credit bureaus is not a bureau. Yes, it's a corporation. A lot of people know that. They like, I know that. Yeah, oh, cool. Cool. But do you know your bad credit? They take your information and sell it to the banks and they get paid more. The reason why the credit bureaus don't want to remove nothing from you, because if they do, they lose money. Okay. The lower your credit score is, the higher they can sell your credit profile because banks make money off of interest. That's their whole racket. The banks wouldn't be in business. They couldn't bank without you. So, which one, if I was a bank, would I want to give somebody with real good credit? It's a lot of competition for them. I got everybody that want to take you. It's like the bad chick on the block. Everybody want to be with her. So she got way more competition. So I can't just treat her any kind of way. So everybody want to compete. I got to step up my game. This is why when you have better credit, they try to entice your business. Hey, I'm going to give you points. I'm going to give you rewards. Girl, I'll give you cash back, baby. This is why they do that, because you're less of a risk. You're a higher, so I can't charge as much. You're less likely to fall. So I want you, and I can't charge you as much interest just to compete. But somebody with really bad credit, hey, all I got to do is give you $300 and hit you with a 36 interest rate. They're 36.99 interest rate. What you gonna do? Girl, don't nobody want you. That's what they gonna do. They'll treat you any kind of way because they say, hey, I can do less and get a lot more. And that is the point. Credit bureaus, they know that. So the banks pay more for somebody with more trouble credit because I can do less and I'm going to get more out of you. That's how it is. And I don't even have to take a lot of risk. They love subprime profiles. You're not going to get them. Girl, you're not going. Can I get some cash back? No. You get McDonald's. You get what I'm saying? They're not giving you that. Nah, girl, no. Can I see you in the daylight? No, I can't see you. We can't go out in daylight. Netflix and chill for you. But you start fixing yourself up, child, look, you start having some confidence, you gonna be more appealing. So I ain't gotta take that garbage. You know what I'm saying? So that's how they treat you. And then when it comes to the credit bureaus, they don't want to let that go. They making money off of you. Why would I let that go? They pay more for a profile like this. So this is why they don't want to remove negative items. This is why you see about 85% of credit profiles have incorrect information on there. It's done on purpose. And they don't want to remove it because they want to make sure that they be able to sell that at a higher rate. They're being paid, they're incentivized in order to do that. The flip side, you ain't never, y'all hard pressed, raise your hand for anybody that ever heard in your life, hey, the bank made them, I mean, the credit bureaus made a mistake and gave me a really high credit score. I don't know what happened. It don't ever happen. It don't have that pendulum never swing the other way where they just messed up and gave some people really good credit that didn't deserve it. They don't do that because it don't benefit them to do that. So this is why you have to dispute, you got to fight for your rights because they're making money off of you. Them and the banks are in bed together. So in essence, the banks are the ones really controlling your life. They actually, them lending to you or using uh, credit terrorism against you. If you don't pay us, I'm going to report this late. They know your life is going to be jacked up. You can't live in certain areas. You can't get certain jobs. It's going to cost you more in interest. It's going to cost you more to get utilities. Your car insurance going to be more. They are really on some mob tactics and they're holding this over your head. So with these new fintech companies allowing you to build credit without doing all of that, I'm paying my utilities anyway, and that can be factored in. It's better for you. And they charge you what, a little $5.99, $9.99. It's well worth it. You're selling thousands. So what Trump is working for is those who funded him. They need to get they funded him for a reason. They funded that campaign for a reason. They want their money back. And that's how I'm going to get it back. You're going to get us in that credit space where you got the banks and you got the credit bureaus making billions a year. So that's the game. So it's not about feelings a lot of time. You need to look at the root. Yeah, it might be working in your favor, but is it for you at the end of the day? No, not really. It's not like somebody's doing something extra for you. They're really working for their true interests. And that's not just for him. Democrats too. They not work this green energy and look at Cali. That's who's paying them. It's those companies. They don't care like that. They don't care like that. So everybody think that a lot of these so-called social justice things that they come up with, it's because the corporations want to focus on that in order not to give you what you're asking for, like paid leave or more family leave and stuff like that. They don't want you to ask for real stuff on the job. So they kind of distract. Look at this. Oh my God. Injustice. They focusing on that. Okay. It's just, they just be making up nothing burgers a lot of times. So you just got to sit there and just get out of your emotions and say, who is to gain? When you look at in the COVID-19, who was to gain to force everybody? Places like New Jersey, where I come from, they're the pharmaceutical capital of the world. That's why they was pushing that because Johnson and Johnson and all big pharma is there. So of course you're gonna die. You know what I'm saying? You're gonna die. Yeah, because who pays the politicians there? Who's the ones funding their campaigns? It's them. It just be smoke and mirrors, y'all. I'm telling you, it's all of this stuff that you see now on both sides. All this political stuff. Follow the money trail. Who getting paid? On both sides, I'll leave it alone. Both sides. Both sides. Folks getting money. Okay? On both sides. I'll leave that there because folks' heart will be, I ain't gonna go there and break it down. Because Lord God, I don't want folks mad at me with the truth. But both sides. There's money on both sides. They just politicizing something. Okay, that's all I'm just saying. They politicizing, y'all. Imagine if I talked about the jab, jab in the time that was hot. Some of y'all, oh my God. Some of y'all, you are the reason why folks are leaving here if you won't take the shot. How many people were mad at folks because they refused? I was pregnant and I refused. Why would I take an experimental shot? Child, blah. Who heard that you take a shot of polio and still get polio? How stupid is that? Why would I take that? I'm not doing that while I'm pregnant. I'm not doing that. I moved to a whole state. Miss me on that. I'm not, come on now. You're not going to scare me. Ooh. Okay. Ain't nobody, I'm not doing all of that. But let me have said that at that time. Oh, Sherry is an anti-vaxxer. And then they come up with stupid little things that folks get. You go woke, you go broke. And then people, you're woke. And then you got on the other side, you're a conspiracy theorist. They do all of this stuff to trigger you. You just got to take a seat and sit back. What you do is play the game like the big corporations. The big corporations, how should I say this? Let me say it like that. I'm going to say it like this, and you figure it out. I'll let you figure it out. Let me say a mystery for you. George Soros. Everybody know George Soros, big Democratic donor, right? If you don't know, now you know. Huge Democratic donor. It's Soros. Yeah, it be Soros. Yeah, it be Soros. Soros be funding a lot of stuff. But at the same time, who is Soros against? Trump. Soros is against Trump. My God, he's against Trump. Well, let me ask you this. How come, who was it? Mnuchin was the treasurer last Trump term. Who was his business partner with the One West Bank? George Soros. Look it up. George Soros. Out of all the people that Trump kicked out of his administration, they didn't kick him out. And he was George Soros. Who is Trump treasurer now? Scott Bessent. Scott Bessent was the same one with key finance. He's George Soros' partner. Google it. Big partner. Yeah, the Scott Bessent right now. George Soros. George Soros. He's the one with George Soros that crashed the Britain pound, the Britain markets, the Asian markets. Let me get you real mad. Who funded Kamala Harris' campaign? George Soros. Who let Key One Bank, when they foreclosed on everything, who was the AG over there? Kamala Harris. That let them get away with it because who funded her campaigns in California? George Soros. Who keeps winning on both sides? George Soros. I'm done. Come on up, Diamond, and let the church say amen. So you be mad. And now you understand when I tell you red nor blue, neither is for you. At the end of the day, either choice you went, they were both funded by George Soros. Am I saying George Soros is a bad person? Depends. Look at his track record, is he? Look at what happened with the Asian markets. Is he a bad person, or what happened with the British market? I mean, he crashed it. Why did they kick him out of China? Why are we fighting for Taiwan? Who got a lot of investments over there, and why he hates the CCP? They're nobody's friends. Don't get me twisted. They are I am not cheering for China whatsoever. But who blocked him for putting money over there trying to overturn their government. George Soros, people. George Soros. So all I'm just telling you, it's not about who, it's about power. That's it. It's about power. Get mad if you want at me. I'm just telling you the truth. If not, if I'm lying, look it up. And just, is it weird? Both won, both candidates. So, did you really have a choice? I'll let you decide. I just let you decide because this is what they do. These corporations fund both sides because it's not about a candidate. It's about agendas. Y'all, let me just go deeper. Do you really think, you guys, that with how our system is set up, is everything equal? Do you think it's an equal playing field? Or do you think some of these corporations are keeping their stance not because of competition? It's because they're paying and they are actually controlling the game. And how do you do that? Through the laws. And you think you're voting for the laws. It's not. They're just convincing you by politicizing certain things that's actually pain points on both sides. But it's really a game to get you emotionally upset that you don't see. You're up there mad at your cousin who in life, your mama, it was people, they voted for Trump. I hate them. They voted for their mama. I mean, Kamala, I hate them. You mad at your cousin who have done more for you than either one of these people. I'll be honest. That's crazy. It's people that fell out. I ain't going to Thanksgiving. I'm not this. Over folks that actually did something with politics in real life over politics. Either one of y'all only got one vote. So it's not like if your cousin voted for somebody you agree with that they got 10,000 votes. They got one, you got one. In the presidential election, it's only like swing states that actually decide. So most of y'all ain't really even moving the needle. If you live in a Texas or you live in a New Jersey, it was already, or New York, it was already decided which way it was going to go in those states. So why are you mad at the other person? It was what it is. These folks get into these positions, they going broke, they coming out rich. They ain't trying to get mad at their family members. They trying to cake them up. They're trying to get enough wealth for their family that they don't give two rats behinds about your opinion. And this is why things like credit, when I tell y'all it's political because it's policy. That's what political ties into. So when you people talk about the Fair Credit Reporting Act, that's legislation. It's a policy. So when they're making certain changes in things, yes, it affects your lending, the interest rates. If the Fed's dropping it, they're that's called monetary policy. So if the Fed drop interest rates, yeah, you're going to get more lending even if you have more trouble credit. If interest rates go up, then they're going to restrict and they're going to really be looking out to who they're lending to. That's part of monetary policy. So policies like that. But they expand the money supply, it could possibly go up. What you're going to see, that you're going to see more inflation. So the cost. So what I would say at this moment in time concerning credit, if interest rates is going down, you need to straighten up your stuff this time and go on, get your credit right, because there's a small window of time that you can go and get some lending if they're doing things in the housing and you want you a house. Now is the time, because guess what? Stuff might be going up because by them doing that, that means things going to get back expensive. You got about 18 months because it takes that long for it to work in the system. So if you want to start a business, it's coming up. Now is the time. If that's you're to get the money to do that. You need to be wise because stuff is going to go back up. You get what I'm saying, y'all? Now is the time. If this stuff go down, you want to focus on the assets. You don't want to focus on the liabilities. So if you can get your hands on the real estate and you want to get something cash flowing, not something that I got to work, I got a single family home, I got to go to a job. And if I lose my job, this is not going to make me money. That might not be your best agenda right now. But you do want to go for the assets because if you want to sit on cash, they're dropping this interest rate. They're devaluing your savings. So you don't want to work for money because they're printing it faster than you can physically make it. You might be better off by borrowing because you're going to be able to, for you to work for $50,000 and save it, clean up your credit report, borrow, and then maybe borrow from a property that might be a multifamily. You live in that and it cash flow. You get what I'm saying? Once the interest rates that start going up again and inflation is going up, that asset that you just bought, it's going to go up. And so you ain't got to work anymore because you have a tangible asset that's going to increase your wealth without you working for it because it's going to go up. I'm just saying, if they keep the interest rate low, we're going to see eventually, you want to see some inflation. It's going to start getting more. I'm just telling y'all the way it works. It takes a while to work into the system, about a good 18 months. So what I'm telling y'all, pay attention. Try not. It's very hard because if it's affecting you personally, not to take it personally. But the name of the game, how can you do like these corporations do? They win no matter who get it. Maybe you need to hedge your bets. If I have a job, cool. I'm going to work this job. Job is good. Democrat in office, pro work, pro labor. If a Republican in there, I need to start a business and keep this job. So now, either way, who's up in there, I can benefit. I can win. I don't care who get in office. I got this little thing going. I could pull over here. I built business credit. Hey, let's get it. I'll get my tax write-off. I'm working. I got a good job. This business, I could get tax write-off. So I ain't paying all these taxes on this good job over here. I'm leveraging this. Then if a Democrat get back in, okay, it's not as business friendly, but I still got this good job. Let me leverage that. You just play both sides of the coin. So no matter who get in, you can never stop that. I've been on this earth 40 years. And guess what? Hope, faith, trust, and pixie dust. No matter how long you live, somebody gonna get in that office that you don't agree with. So don't worry about it. What you can do, hedge your personal best. Just make sure you set yourself up on both sides as moving forward. That's all I'm saying. Set yourself up, both sides. If you got a job, do not quit that job. Leverage that job, but try to get yourself an asset, cash flowing. Get into business. Like somebody said, like the rich, play both sides. That's all I'm saying. You're not going to stop who's getting in office. You're not. I'm telling you, I don't care. All of y'all that been living over 60 years and plus, you're going to see somebody getting in the office that don't benefit you. So you just don't want to exclusively stand on one side. That's where you're going to get the swings. Leverage both sides. So Diamond, let's answer some more questions, but that's what's coming, y'all. Take advantage. Take account for your life yourself. See how I can leverage what's coming up. They're about to get rolling in that business credit. Start cleaning up your stuff. Say, let me get on this business side. Republicans in office, you already know where it's going. Pro business. So maybe you need to get in business. I'm just saying, hey, well, maybe I need to get me a little business going. Okay, because right, they moving pro business. Let me get over here. Democrat get in office, they ain't keep that job. They ain't pro ain't pro business no more. So let me work. Let me see how I could flex on this job because we ain't in the pro business. You work both sides. That's all I'm just saying. That's what corporations do. Target. Democrat in office, DEI. They as soon as they got about, no more DEI. These Mark Zuckerberg. I'm with Biden. Soon as the election, I love Trump. The Elon Musk, Biden. Soon as he lost, Trump is my guy. This don't think these people got any morals. Their morals is their bottom line. That's it. So all I'm just saying, don't get your feelings hurt and over leverage. Understand the game. They neither side of they ain't winning, and their real constituents is these billionaires on both sides. I'm done. So hopefully that's enough.
Someone had a question a little earlier that said, any word on the credit card interest cap? It would be so helpful.
Word, yes. Bank of America and Citibank are saying they're going to look at this stuff. They're going to look at a plan to cap it with them. Chase and Trump, the girls is fighting. It's a brouhaha with them. Trump is mad. Personally, he just sued Chase Bank and the CEO. He named him Jamie Dimon, and he big mad. So I don't know if you JP Morgan Chase customer, I don't know if they're gonna stand. I don't think they standing down. He is suing them for that debanking. So, and their Chase is one of the ones that's saying HE double hockey sticks. No, we're not reducing nothing. I just dropped the video. Elizabeth Warren and Trump is saying that they're going to work bipartisan. So you got both sides to cap the interest rates. The reason why midterms is coming up, both sides want to win. It's not like really for you. If they cap it, it's for 10 years. I mean, now for a year at that 10%. And that's the real agenda. Midterms is coming up on both sides. So that's what's working in the works thus far. So Citibank and Bank of America saying they will consider, they're looking at it. They're working on they're looking at it. I ain't saying they saying they're going to see ways on how they can so-called finesse
it. Todd Smith asked, when is the best time to pay off your credit card in full? Is it at the closing date?
Well, if you already have a balance on that card, what they're saying, so put it like this. If this card is at 0, you don't pay interest on anything after the due date. So if you pay it on the due date and on the due date or before, you don't accumulate any interest for any new purchases. Any balances carried past that, you pay interest. But what they're saying, like with the statement closing date, you want to pay it off because even after it can roll over. So sometimes you ever paid your credit card off and then you looked at, like, I paid this off. And then you look up and then it's like, oh, you owe $200. What the heck happened here? Because you didn't pay it before the statement closing date. So even with that, that's where you really want to pay it off. But if you're not looking to accumulate interest, a lot of cards Your statement closing dates for a lot of cards is around that payment due date. So you need to see how your card individually cycle. But this, yeah, it's going to be that statement close date. But a lot of times I see it's around that payment due date. But as long as that due date where it's saying your payment is due, if you pay it off on or before your balances, you don't accumulate any interest for those charges. It's only balances carried over. You accumulate interest.
And just to plug in the Elite Credit System, when you guys become Elite members, there is a feature with our partners with Smart Credit that does tell you and email you every month when is going to be the best time to actually pay down your cards. So you don't even have to guess. It's going to tell you like, hey, you need to pay, if you pay down this card, and then it will give you an estimate of because I see, Todd, you asked, well, will it help your score go up?
Yes.
It will calculate like, hey, you might potentially get 6 more points, 10 more points, whatever like that, if you do pay down your card before this particular date. So if you become an Elite member, that is going to be something that you get weekly, right, Mom, in your emails.
Yeah, and when he's saying do it, make your score go up. Oh, now the payment due date.
Mhm.
Now, not the statement close, because some people those dates are different. I do see like with my cards, that statement closing date is by my payment due date. But the payment due date is when that payment is due, right? So if your card said pay this card by the 5th of February, that's the statement due date. It does rotate according to the calendar. February, we're coming up on a shorter month. So that date do change. So you need to look at your statement due date. 4 days after is what the report date is. That's when that credit card company reports your balance to the credit bureaus. So it's important, if you pay down that credit card by that statement due date and you pay the card down, do not use that card until after about 5 days. Just check your credit reports to make sure, because if they report that down at zero, then it's stuck there for the rest of the month. But what it is, people are pay that down, then say, I paid it down. Then I'll go 2 days later and charge a new TV for $2,000. You thinking, yo, I paid my card off. That's not going to show up. I'm going to pay it off before then. No, that $2,000 you paid for that TV will show right up on your credit report. So you want to make sure you're past the report date. It's going to be generally 4 days after the statement due date. That score boost that she's talking about in Smart Credit, it'll tell you pay it on this date, it'll update on this date. So it'll do that for you. It'll tell you when they're reporting it to the credit bureaus. So that's when you're going to see your score go up, when they report that balance. But at that point, if you didn't pay it off and then try to pay it off after that date, you're going to see your credit report stay the same, because that balance that's stuck there is stuck for the next 30 days. Ain't nothing you could do. So you'll see your score go up if you pay it down before the report date and don't use that card. So hopefully that answers the question.
Yes, so as far as questions go, I believe that was the last question that we had. If you guys have any last minute ones, you guys can put it in the chat. A question I wanted to ask you personally that would be helpful to everyone that is listening to us today is how are you personally preparing your credit for the economic shifts that we're seeing in 2026?
Well, with me, my focus is to try to develop some land I have. So mine is really about, not that it's avenues to get funding from the bank to build is my agenda right now. So that's why I said too, when we talk about is it's all about your whole personal, what you want to do personally. So just to share with y'all, I want to maybe my own little triggers. I want to do some homesteading. So that's what I'm looking for. I purchased some land and about 5.5 acres. And so I want to set up some outbuildings. It's already some fencing. So that's going to be my not pet project, but that's going to be my direction. Now, why did Sherry do that? What we just discussed earlier. That's a great question. Hey, we see Trump talking about farming. Well, I want to be a homesteader. I want to go over here. Let's see. And it's some in Texas, there's a lot of rules, particularly with the land we bought. It's agriculture, it's an ag exemption. So on there, for an ag exemption, it's $28 a year for your taxes. Way cheaper than what I'm paying in New Jersey for a rental property. So with the USDA, they got funding, they got also things like farm credit, so that's kind of my focus is to get on that farming side. I don't know if anybody here, but you can do farming activity and not necessarily own land. There's people that sell that they have what's quail, sell quail eggs. You can go to your local farmers market and sell those. That's a quail is something you can, it's people that raise those in their garage. Also, another big thing I'm finding out, rabbit poop. They call it liquid gold. No, I'm dead serious. If anybody, I had a rabbit. If you have a bunch of rabbits, and another thing, rabbits, y'all know, produce, people sell rabbits for rabbit meat. There are certain regions people eat rabbit meat, and people who, if you guys have a green thumb and garden, rabbit poop is real good for gardening and growing food. So that's another thing. People sell, like my mom bought a bag of rabbit poop for like a not even a pound, like a small bag. She paid, somebody was selling it on Facebook Marketplace for $8. So you can do certain activities. People do microgreens farming. People are also do hydroponics, like with fish. There's different things that's where I'm going to, is to see what's up with this farming industry. And me and Diamond, I talked to my father, dad. My father he's been doing that with a land for years. I wanted to bring that in for y'all. Like he does tree, well, he'll tell you straight, I'm a tree farmer.
Mm-hmm.
He's way better with that raw land than me, raw land investment. And so my mindset was, at the time buying that, listen, homes and all of that is up high, buildings, maybe investing in raw land. Also offering my kids doing a family compound that you can get land. If you have land, you can leverage that with the banks and you can build. You can also manufacture homes, however way that you want to get. But that's my thing, trying to get into livestock. I already have a stock pond for a pond for wildlife. My father, he you can do with raw land. He would lease his house out for hunting, also fishing. The USDA came in and stocked his pond. They will even build you, y'all dig you a pond. There's programs like that. And so certain things with livestock, certain programs that give you donkeys. If that's what you want, donkeys are good defenders if you have livestock from coyotes. So that's kind of my direction, chickens, and even trying to not just homesteading, but getting in some farming activities. So that's my perspective. But you might have something different. Somebody else might want to launch a business, but if that helps somebody, that's what I'm looking for, more or less generational wealth. With that whole thing with the food stamp thing, that triggered something in me. And food was up high. I said, wow, What would you do if you lose your job? And how would you get food? If we're all dependent on just money, no, it's time back to me for me to go farm, to do something, to raise something, to grow something myself. So that's what I'm thinking of, and that's my direction.
Someone asked, would you advise investing in Acre, which is the JD Vance company for farmland? Is that something that you've heard
Heck
of?
no, no. I get what y'all saying. I think they want 15. They actually, somebody about to get mad. They sitting up there taking them farm land. So I mean, if y'all want to, is nothing wrong. But that was one of the complaints about the Trump administration with JD Vance, who was also Peter Thidel, pretty much was said to be his pick with PayPal. And we know Elon Musk, Peter Thidel actually launched PayPal. That's where they got, and JD Vance worked very closely in with Peter Thidel, and that was one of the things that they had that acre, and they having people invest, buying farmland from struggling farmers and turning them out like sharecroppers, like they did, buy them and make them. It's not funny, but making them then work the land and pay them like that and kind of taking their land. So I went and I don't think I would want to support that. But you could just that's what I found out. Do your research. Hey, somebody lost to somebody else's game somewhere. So if hey, I mean that's unfortunately that's the nature of business. But I don't trust them like that. I, I wouldn't want to control my own thing like that. So that's just my thing without that corporation, because that's kind of like buying stocks. You can invest in stock yourself. What's the guarantee they're going to get you back or file for bankruptcy and screw you over out of your return? If you control the land, you to me you can have more control, or even an acre of land, you can turn it around and lease it out to somebody who want to put a trail of RVs, things like that, campground. They got glamping, or it's some people that just want to camp. So you can do things like that. So
So Linda Brown asked the question. First of all, my apologies for missing your question. And she said that you mentioned that you could up your credit score about 40 points. This was sort of towards the beginning of the live. Do you remember what
oh
method?
yeah, so adding on a credit card, if you're under a 700 credit score, and as long as you do not have a new negative item hitting you. So what I say with that, y'all, say if you behind on your credit card payment and say, hey, I'm missing my credit card. Can I go and get another credit card because this credit card is behind and I need to increase? No, you need to catch that payment up one time, or if your car loan. So people like, oh, and say, I just missed a payment last month. Can I add on a credit card and see? In that 90-day window, is nothing you can do. You need to ride it out. And after that 90 days, if you add on that credit card, long as there's nothing negative new hitting your credit report. Now, one thing y'all need to look for, Linda, if you got a charge off already, look at your credit report or a collection and examine that. Y'all all probably seen this, and this is why your score is not going up. They will hit you late every month. You'll see a CO or a C. And you're like, why the heck? A lot of y'all, why my score is not going up? It can be if you have a charge off or a collection, go and see if they're reporting you late every month. If they're doing that, they're doing it on purpose to make you pay them. So you need to dispute it. You need to dispute it. Now, if a charge off is doing that to you, that's a violation. They can't do that. So that's what you want to do. And somebody said, what credit card should I add, Denise? I see you should add the credit card that's best according to your credit score. So long as it's a credit card If you're under that 700 credit score, adding a credit card, you could see an increase in your credit score. But if a person got, let's say, a 580 credit score, I would not tell you, oh, add an American Express card. They're probably not going to take that credit profile, that credit
Mm.
score. So you need to go according to your credit score and look for credit cards in your category. If you're a person that have a 700 credit score, I would not tell you Credit One Bank is where you should go. You probably have way better options than Credit One Bank. So that's where your own personal review of your credit reports on what would be your best options. If you have, a better credit profile, you don't need a subprime company like Credit One Bank, First Premier, anything like that. You want to try to get better tier credit cards. So that's what Denise is going to dictate your decision. If you're a part of the elite credit system, just email me. I'll send you a list according to your credit scores. Okay.
Mhm.
If not, look at your credit scores, all three from each bureau, see what's the highest score. So if Equifax is the highest, look for banks that pull exclusively from Equifax to approve you. So, like I said, probably one of the bigger one banks off the top of my head is going to be Citibank, but it does depend on your region. Um, it depends on where you're located, but they pull a lot as a major bank. But Citibank isn't taking lower credit scores. They're not for you if you got 600 credit score. Don't go to Citibank. But I'm just giving you off the top. But just search it out. Okay.
I just want to do a couple shout outs before we answer one more question and then we begin to close out. So, a quick shout out to Miss Wilson, who said
Oh,
the
Miss
elite credit
Wilson.
system is 100% accurate. My life and my score has changed tremendously, and my score is still growing. Thank you, ladies. Um,
Miss Wilson is, man, Miss Wilson, she's actually done. She just stays in the group. She adds value, and she adds value just with her presence. But Miss Wilson, I ain't putting her, but she's top tier credit. And just really her progress, she just is she's we trying to get her, which she already is, just in one better position, just getting her in chase. She's chase ready, but we want to just make sure inquiries and stuff like that. But she's there. So she's really a gem. And one thing too, I'm gonna say, y'all, part of your journey is going to be how workable you can be.
mm,
One thing about Miss Wilson, the information, she takes it and applies it. Um, some people don't take information and apply it. You got what I'm saying? It's they want to do everything else. And I know life, don't get me wrong, because if life, that's something else. But some people are really resistant about applying the information. And it's not because they can't. They just don't, they're not comfortable with trying to do it. And so your credit journey is going to depend on your will to win. Do you really want it? And I had somebody in the group told me today, because there's some people like Miss Wilson kind of been there for years. And one thing that he told me today, he said, listen, I'm going to tell you this. Because I said, sometimes people don't take the information. He said something good. He said, and I'm just going to use the term, the worst person you could ever meet. Every morning, they're going to get up and move towards and do what is important to them. The worst person the most deplorable person they're going to get up and work towards what is important to them. So if that person, criminality is important to them and that's what they want to do, they're going to do that. If weed is important to that person, they can be the least motivated person, but those that drink or do drugs or whatever, They might not do anything else in life, but they're going to do what's important to them. Learn, find a way to get some drugs and to get high, and find a way to get something to drink and sit around, because that's what's important to them. They're going to find a way to do it. If improving your credit score is important to you, you're going to be dedicated to do it. If you don't move in that direction, when you have the opportunity or the information, you just got to realize that's not important to you. What you're doing besides that is what's really important. You get what I'm saying? If it's complaining, just like a person that's doing criminality, staying free, their freedom is not important to you. No, to them, no matter what they tell you. They'll act like, oh, being locked up is the worst thing. If being locked up is important to you, most people who don't want to be locked up ain't doing crime. They'll tell you from the door, baby, I can't go to jail. I can't do it. So they're going to follow the law to the best to their ability, because freedom is important to them. But the person that tell you doing criminality all the time, man, I don't want to get locked up, not by their action. That ain't important to them, because freedom must be the last thing on your list on how you move and actually walk out your life. So he hit me that today. I said, man, so he said, so you need to focus on that. Don't get caught up. If people are not doing that with the information that you're giving them, just know that person, it ain't important to them. People will say anything. And it's not about what they say, it's way more about what you do. So maybe that can be a paradigm shift for people, that you might be the person saying, oh, I'm really going to get my life together. But if you're not getting up every morning and you're not moving towards that, it's not important to you. Just really embrace that, or say like, yo, I gotta make this important to me. Like, I really have to stop. Diamond, you could say that with weight loss. Me and you lost weight. We had to, what we have to make important to us. With me, I gained so much weight. I'm gained over 100 pounds. I have lost over 100 pounds. Wasn't overnight. I don't know how much you lost. What, 60? 50. You know what had to become important to us? Our diet and exercise.
Mm-hmm.
Something I hated to say. I used to hate. But now, when you make it part of your routine, when it got to that point, when I got tired of being heavier, or I got tired to not, you know what? Thank God for the Smart Credit Conference. You remember that. I had to speak. And I said, I do not want to get on this stage in this condition. That's what really got me going. I said, that's when it became important to me. Honestly, I have to be real with myself. I told you, I lose weight. I lose weight. And I wasn't moving towards that direction. So at that point, it didn't become important to me, honestly and truthfully, until I said, dang, I got like 7 months before I got to present on stage. And then it became important to me. Mm-hmm. So thank you. Somebody said, congratulate. Thank you so much, Deborah. Thank you. And so we just at the new year, and this is what the credit kickoff is. We're not saying you got to join this system, but I can commend everybody that's here. Credit is important to you. You are moving in the right direction. You're here. You know what I'm saying? And until, even sometimes, as long as you stick in, as long as you keep being motivated, hearing the information, that'll drive you to move to that point. And so all we ask is, do it for yourself, take action. Like at the end of the day, I tell people, I ain't gonna be more concerned about your credit than you. Because if you okay with your family and your children and your wife or your husband living in a community that they might not be safe, that bullets at any time can be flying around, ain't nothing I can say to motivate you if that's not motivating you. So when I'm telling you, if you are being complacent and that's not bothering you, then that's a you thing. It just is not important to you. And we got to keep it real. I hate too another thing when you make that statement, and I'll land here. Why do everybody equate being in the hood with associate being black? Can somebody tell me that too? So he's like, oh, you don't want to be around black people. Whoa, 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 whoa. Who say black people is always broke or in the hood? I mean, you grew up in a neighborhood with a lot of black people and wasn't nobody broke. So let's not too always associate that with being down. That I got to can't get out the hood. You can live around other black people. I grew up in a neighborhood where Franklin Township, Somerset, New Jersey. It was that's where I grew up. I came from Newark, but even in Newark, when I was living there in the 80s, everybody owned their own home. And it was, it don't mean there's neighborhoods like Diamond Pflugerville is black partner and
Mhm.
around Austin, and it's primarily black, and it's one of the wealthier neighborhoods places in California. Let's stop thinking that, oh, you don't want to be around your folks. I had somebody say that my folks always got to be in the worst condition. Baby, that's you in your experience. Please don't project on the rest of my race. Okay, please don't do that. That's your mindset. So don't think because somebody said, where do people think going to the suburbs is a flex? If wherever you going is putting you in a better position, it is a flex. There's a lot of suburbs that are black, minority. There's Jewish, like what Highland Park, primarily Jewish. So it's like there's some places that's primarily North Newark Hispanic. So and that ain't bad. I am bound section in Newark is Portuguese. So you and that's a area. Why do we always gotta equate us being around one another and being around our folks? Is in the most jacked up position in the world. Boy, girl, bye. Somebody said that to me. Like, bye. So you feel that's a flex? What moving to the suburbs? What's wrong with moving to the suburbs? What's wrong with that? There's suburbs like Willingboro and other place like that. What's wrong with living in the suburbs? Somebody said I lived in Newark, and it's nice sections in Newark. To be honest, like in cities, there's nice sections all over. Newark. You talk about Ironbound section that is Portuguese, but there's even Society Hill in Newark, right there in the Central Ward. That's nice over there. I will walk through there. I inspect through there. It wasn't nothing shaking. Society Hill, that Central Ward. There's different areas. So everything shouldn't have to be in like a negative connotation. I'm just saying. I don't know. Maybe we just have to change that when it comes to like we got to be in the worst position. It's you talk about New York City. There's Lower Manhattan. Certain parts of New York City is really wealthy. So it don't mean that because I live in New York City, all of New York City is the alleged hood. Or like, oh, you ain't trying to be around your folk. No, you might not. That lifestyle of that urban lifestyle might not be conducive, maybe for Diamond that have no children. But if she have a child and she want a yard for her, or I want my child not to be in the city riding a bike where they can get hit. I want more of a place suburban thing where it's not a lot of traffic. That shouldn't be a negative thing. It's a lifestyle change. So and somebody made a comment, oh, I went to a place, it's nobody around me, and I had to do it for my family. Well, that's like, then you just want to do that. You just wanted to do that. I made sure when I found a place that it is a mixed, diverse community, and my children would have their own people and other people around them with a mixed thing. So who in their right mind will go to a sundown town? Like also let's make sense. Like, oh, so you got people with, both like, I think I got to move to a sundown town in order to put my family better. I have met people of the black race that just think that I got to move to a sundown town. Why would you move to a place that's hostile against you? That don't make sense. Like, that just don't make sense. But at the same time, let's not always think we got to be in a worse condition to support our folks and to be down. Let's try to get ourselves in some communities and build some communities. That's a better way of life. So I'll end there.
So that, I think that transitioned us well into talking about our next challenge for the month. We're still figuring out our structure and how it's going to be, and the links to give you guys, but we're talking about no more getting it out the mud. So just leaving the mindset of trying to do life with no help, no guidance, no community. So this challenge is definitely going to be us talking about shifting the mindset from me to we, and how we can partner together, how we can collaborate, how we can pull our knowledge and resources together, and how we will multiply our impact. So we'll be talking about sharing strategies to build credit instead of gatekeeping them, which I already know that's not even something that we do over here. Leveraging each other's wins as proof so that we can all win, circulating opportunities. We'll be having hopefully some family members that we have on, because our family is big on collaboration and pulling together and leveraging the resources that we have to try to multiply. So hopefully we get that together. But we also have some other people that we collaborate with, that we partner with, that we network with, some friends and peers that will be on to talk about so many different topics. So we would love for you guys to join the No More Getting Out the Mud challenge if y'all can. And you want to stay connected with us, you can go to sherrybeckley.com and you can sign up for our newsletter. This just helps you stay connected, and then we can give you the information to how exactly you can join. This is not something that you guys are going to want to miss, because it's going to be so many gems just dropped. Other than that, I see so many questions that we didn't get to because of time. So hopefully, if you have any credit questions, you can either email us, you can join the elites and become an elite member, where a lot of mindset and community happens there. Not only can you get strategies for your own particular situation, but again, you stay updated on the things that are currently happening in the economic, political, and credit system at this time. We want to thank you guys so much for joining
Let me
us.
just add one thing as we
Go ahead.
land. Miss Tara Murphy puts it, she said, we love everybody, Black, white, Latino. And I want to land on that. She's absolutely right. To be honest, I had so many, even Diamond, when I lived in Hartford, the South Side, highly Hispanic. Those were some of the best people to me, like took care of me while I was single, helped clean my thing. I have had support from so many background. White, I have had support. I really honestly, I never really had a major issue when I came to Texas. I don't I haven't had racism in the environment. I haven't had, even with the police, having my firearm in the car. I was scared, but I told the cop, yeah, that's fine. White cop, I haven't had that. So a lot of it too, don't, sometimes you'll carry something and project. You get what I'm saying? And it might not always be that way. Diamond, what you grew up in a diverse community, and sometimes that's good, because in order to excel in life, you do have to learn how to work with other cultures, because the United States is a mixed culture. And you should work in community, don't get me wrong, but why would you block out other people? Because not everybody's seeing you that way. Not everybody dislike you like that. So also understand that sometimes we got people in the elite credit system. It's so many. I have Asian people that come work with me, show me love. Oh, white people that come work with me, show me love. And that, so what I'm telling you, sometimes don't let like bias or prior experience believe that you can't work with other groups, or other groups have something. My husband is Hispanic, so that should just be what you call it. So there's nothing, that. So that's another thing. Just remember, you guys, if you carry that, don't let politics divide you against people. That person might actually have what you need, to be honest. So don't close doors because of, I'm going to say, bigotry or a bias. I understand if you had bad experiences, but sometimes make sure you treat people as individuals, because you might miss out on your blessing. I'll be honest. You really might miss out on your blessing carrying some kind of bias against a people group. And that's all I'm just saying. On each category, meet people as who they are individually, So I'm just gonna put that out there, because sometimes being that focused, you could mess around and miss your blessing. And that's the exact person that really will help you and really don't have nothing against you. To be honest, it could be something that you're carrying in you. And not saying it's not valid. It was a bad experience, but just don't let fear keep you out of a gate. Okay. Because I grew up in North, and when we moved to the suburbs, we had a lot of people that would say, I'm not going out there. We're not going out there. Family members that wouldn't come out there. But guess what? Where we lived out there, we didn't have to lock our doors. Our car doors was open. There's been many times. So, and wasn't nobody doing nothing to you, living in even, certain communities. So just don't have that, because they say that about the projects. Was the walls around the projects, that was a saying, built to keep people out or keep you in? Sometimes people don't even have to, with a lot of this media, what they pumping, they ain't got to put up a wall to keep you from over there. They just got to put out propaganda. So you'll be afraid to go somewhere where you could get a job. Oh, I ain't going over to that town to get no job. They don't like me. That might be where your job should be and got a good pay and God's divine favor for you. But because you're letting fear and just have a predisposition about something, it keep you out of your blessing. So I'm just saying, keep that in mind. And we just land on that as we go into getting that out the mud challenge. This is what it's for, how to build credit together. And we're challenging you to kind of challenge some ideas that might be there to open you up to new things. So thank you everyone for your time.
Thank you
Thank
guys
you,
so much.
Simon, for your time on this Saturday night. So thank y'all, and let us know when we leave. Let us know what we can do better, or what things that you might need, so we can also answer those questions. And did you guys improve over these 4 weeks? Did you use some of these tips, and did it help you improve your credit score? So give us some feedback.
Yes, thank you guys so much. And again, if you guys ever have any questions or you're trying to get in contact with us, always you can go to sherrybeckley.com or quick guide to boostyourcredit.com. But I hope that everybody have a blessed night. Thank you guys so much there was a lot of conversation in the chat tonight. It was super inspiring and great to see. So thank you guys.
And I see somebody said, how do I become an elite member? We'll drop the link even when the live in with the link to the elite credit system, and you can click on that link. So as soon as we end this, I'll put it right there in the comments section. So thank you everyone. And Diamond just dropped it here again, the elite credit system, if anybody is interested in checking that out and signing up. So enjoy your night and be safe. You guys, thank you so much. Bye-bye.